So, as a software engineer, why would this video about trading companies be relevant to you? What type of software would you actually be writing at these firms? What programming languages would you use? What's up, legends? In today's video, I'll be giving you an overview of software engineering in trading companies. Some trading companies you may have heard of include Jane Street, Citadel, IMC Trading, Optiver, and Five Rings Capital. In this video, I'll explain what a trading company actually is, whether a trading company is the right fit for you as a software engineer, and what kind of software you'll be building if you work at one. Why work in trading? So, as a software engineer, why would this video and trading companies in general be relevant to you? Well, I'll give you 3 reasons. The first reason is simple. You really like making money. These companies pay a lot of money. The second reason is that you love computer science. These companies give you the opportunity to apply real computer science fundamentals to solve real-world problems. Things like compilers, operating systems, networking, memory models, latency, efficiency, and performance optimization all come into play. You'll get to work on challenging problems where these concepts actually matter. I'll even link Jane Street's engineering blog as an example. The third reason is that you enjoy ownership and responsibility. These companies, especially the smaller trading firms, tend to give you a lot of responsibility and ownership compared to many big tech companies. You'll often have a much larger impact on the systems you work on. Trust me on that. Why not work in trading? Now, I'll also give you 2 reasons why this video may not be relevant to you as a software engineer. The first reason is that these companies have traditionally had a reputation for poor work-life balance. Although they pay extremely well, if you calculate your earnings on a dollars per hour basis, you may end up being just as well off or even better off working at a big tech company. The second reason is that the interviews are traditionally very difficult. Preparing for them can require a significant investment of time, effort, and energy, and you may not want to go through that process. What is a trading company? I should also mention that as a software engineer, I've received multiple offers and completed many interviews with trading companies myself. I'll be sharing what you need to know about trading companies to get through those interviews. The good news is that you really don't need to know much finance. You're a software engineer, and these companies understand that. My very simplified understanding of a trading company is this. It buys and sells things in order to make a profit. That's it. They might be buying and selling Apple stock, commodities, currencies, or other financial instruments. Personally, that's the simple mental model I used, and it was enough to get me through the interview process. Another important thing to understand is that there are different types of trading companies. The 3 main categories I'm aware of are hedge funds, proprietary trading firms, and market makers. A hedge fund takes money from external investors and trades on their behalf. Since the money belongs to investors, the fund doesn't keep all of the profits. Instead, it returns a portion of the profits to investors and keeps a percentage as compensation. The second type is a proprietary trading firm, often called a prop trading firm or prop shop. Companies like Jane Street fall into this category. These firms trade using their own capital, which means they get to keep all of the profits and reinvest them back into the business. The third category is market makers. Companies like IMC Trading and Optiver are examples. I don't fully understand every detail of what market makers do. The key term you should know is that they provide liquidity to the market and make money by doing so. That's really all I knew during my interviews, and it was enough to get me to the final stages at some of these companies. Of course, doing a little extra research never hurts. Types of software in trading. Now, this is probably the most relevant section for you as a software engineer. What kind of software would you actually be writing at these trading companies? I'll give you a few examples based on what I've seen and learned while interviewing at these firms. The first category is support software. At many trading companies, there are traders who are manually making decisions. They're clicking buttons and saying things like, I want to buy 1,000 shares of Apple, or I want to sell 10,000 shares of Meta. As a software engineer, you could build tools that make their jobs easier. For example, you might create a better interface for viewing Bloomberg terminal data. You could build dashboards that help traders monitor market movements more efficiently. Or you could create tools that streamline the trading process itself. Essentially, you're building software that improves the productivity and effectiveness of traders. Another type of software you could work on is an automated trading system. Personally, I find this area really fascinating. In these systems, the human trader is either partially or completely removed from the process. Instead, software receives data from sources such as stock exchanges, news feeds, and other market data providers. An algorithm then analyzes that information and automatically decides whether to buy or sell. The decision-making logic can be extremely sophisticated, involving machine learning models and advanced statistical techniques. Or it can be surprisingly simple, such as, if the price falls below a certain value, buy. These automated systems are a major part of many trading firms. High-frequency trading. One thing I haven't talked about yet is the need for speed. In many trading companies, efficiency and low latency are absolutely critical. Think about it. Many trading firms are pursuing the same goal, making a profit. So how does Trading Company A differentiate itself from Trading Company B? One major advantage is speed. These firms need to receive market information as quickly as possible from data sources, such as stock exchanges. That means building ultra-fast exchange connectivity systems. They also need to execute trades as quickly as possible. The faster they can act on information, the greater their potential advantage. As a result, you'll find teams focused on reducing latency by microseconds or even nanoseconds. These low-latency systems are incredibly important in certain trading firms. That said, not every trading company operates this way. Some firms focus on longer-term strategies where trades happen over days, weeks, or even months. In those cases, shaving a few microseconds off execution time may not matter nearly as much. Programming languages used. So, what programming languages would you typically use at a trading company? For the systems where latency and performance are critical, you'll often find C++ being used extensively. Many of these firms require a very deep understanding of C++ and low-level system performance. However, trading companies also use many other mainstream programming languages. Not every application needs to be ultra-fast. For example, user interfaces for traders, reporting systems, internal tools, and reconciliation systems don't usually have the same real-time performance requirements. Reconciliation systems, by the way, are tools that analyze all the trades that occur during the day and perform various checks, calculations, and reporting tasks based on that activity. Because these systems are not as latency sensitive, they can be built using languages such as Java, Python, C#, JavaScript, or pretty much any language that's appropriate for the task. So, I hope you enjoyed my thoughts on trading companies. I genuinely find this topic interesting, and I hope this video helped you better understand what software engineering looks like in the trading industry. If you have any questions, let me know in the comments. I could talk about this topic all day. Thanks for watching, and I hope to see you in the next video.